What's up everybody, it's Tommy and welcome back to the channel. This week we're diving into a question I get all the time. How do you invest when the market seems so uncertain? Some people are saying we're headed straight for a recession while others are claiming we're in a boom cycle. My take, prepare for either scenario and you'll be in a great position no matter what happens. The way I see it, money should be divided into different baskets. My investment basket is money I don't need to touch for at least 5 years, ideally longer. This long-term perspective allows me to ride out any short-term volatility and focus on the bigger picture. Now if I need to access the money sooner, say within the next year or two, I'm putting it in safer places. Think high-yield savings accounts, CDs, or even short-term treasury bonds. These options might not offer the highest returns, but they provide stability and peace of mind. Remember, this is just my personal approach and I'm not a financial advisor. It's crucial to do your own research, consult with a professional if needed, and make decisions that align with your individual financial goals and risk tolerance. Let's kick things off with Tesla, a company that needs no introduction. Love them or hate them, Tesla has been at the forefront of the electric vehicle revolution, and their impact goes far beyond just cars. We're talking about renewable energy solutions, battery technology, and a level of innovation that's disrupting entire industries. One of the main reasons I'm bullish on Tesla is their market dominance. They've consistently outsold their competitors in the EV space, and their brand recognition is unmatched. This first-mover advantage is huge, especially in a rapidly growing market. But it's not just about cars. Tesla's energy business, with products like Powerwall and Solar Roof, is gaining serious traction. As we transition to a more sustainable future, Tesla is well positioned to capitalize on the increasing demand for clean energy solutions. Of course, no investment is without risks, and Tesla has had its fair share of volatility. But for long-term investors who believe in the future of electric vehicles and sustainable energy, Tesla remains a compelling opportunity. Now I know what you might be thinking, isn't Tesla's valuation already sky high? And it's true, Tesla has been trading at a premium for quite some time, but here's the thing, you have to look beyond the current valuation and focus on the long-term potential. Tesla is constantly innovating and expanding into new markets. Their self-driving technology, while still under development, has the potential to revolutionize transportation as we know it. And let's not forget about their gigafactories, massive production facilities that are ramping up production and driving down costs. Another factor to consider is Elon Musk himself. Say what you will about his personality, but there's no denying his vision and ambition. He's a master of marketing and generating hype, and he's constantly pushing the boundaries of what's possible. Investing in Tesla is not for the faint of heart. It's a volatile stock, and there will be ups and downs along the way. But for those who believe in the company's long-term vision and are willing to ride out the storm, Tesla could be a game changer. Like any investment, Tesla comes with its own set of risks. Competition in the EV space is heating up, with traditional automakers finally taking electric vehicles seriously. We're also seeing new players emerge, both in the US and internationally. Another risk factor is Tesla's reliance on Elon Musk. He's the face of the company, and his actions and statements can have a significant impact on the stock price. Any misstep or controversy surrounding Musk could negatively affect investor sentiment. Then there's the issue of execution. Tesla has ambitious goals, but they've also faced challenges with production delays and quality control in the past. Their ability to scale production and meet demand will be crucial for their long-term success. So, is Tesla the right investment for you? That depends on your individual risk tolerance and investment timeline. If you're looking for a stable, low-risk investment, Tesla might not be the best fit. But if you're willing to embrace volatility and believe in the company's long-term potential, Tesla could be a wild ride worth taking. Now let's move on to another tech giant shaping the future, NVIDIA. NVIDIA is the powerhouse behind countless technologies we use every day, from gaming PCs to data centers and AI transforming industries. NVIDIA's GPUs handle complex calculations, essential for gaming and research. Demand for NVIDIA's products is growing. They've expanded into AI, impacting self-driving cars and medical imaging. NVIDIA's diversification ensures future success. NVIDIA is at the forefront of the AI revolution. AI is transforming industries at an unprecedented pace. NVIDIA supplies the tools for this gold rush. Self-driving cars process massive data in real time. Cloud computing relies on powerful GPUs. Medical researchers use AI for new treatments. All these applications are powered by NVIDIA. Demand for NVIDIA's products is increasing. They're investing heavily in research and development. This ensures they'll remain a leader. Investing in NVIDIA is investing in AI's future. It's a bet on the growth of transformative technology. For AI believers, NVIDIA is a compelling opportunity. Now I know some of you might be thinking, isn't NVIDIA's stock price already quite high? And yes, it's true that NVIDIA has seen significant growth in recent years, but with strong fundamentals and a commitment to innovation, there's still room for growth. NVIDIA has a history of strong financial performance and a solid balance sheet. The increasing demand for their products, especially in gaming and data centers, is notable. Despite risks, NVIDIA's technological leadership makes it a compelling long-term investment. Now, let's dive into a company that's less about flashy consumer products and more about the brains behind the operation, Palantir Technologies, or PLTR. You might not see their logo on billboards, but their software is working behind the scenes in some of the most data-heavy fields out there. We're talking government intelligence, healthcare, cybersecurity, you name it. Palantir specializes in sifting through mountains of data and extracting actionable insights. It's like having a superpowered detective that can connect the dots no human ever could. In a world increasingly reliant on data, Palantir is well positioned for growth. Their software isn't just a nice-to-have, it's becoming essential for organizations to make sense of the information overload and stay ahead of the curve. Now, some investors might shy away from a company so deeply involved in sensitive sectors like government intelligence. But, let's be real, those sectors aren't going anywhere, and Palantir's established presence gives them a significant edge. Of course, no investment is without its risks, and Palantir is no exception. One thing to consider is the ethical debate surrounding their involvement in government surveillance programs. Some investors might find this aspect of their business off-putting. Additionally, Palantir operates in a highly competitive market. Tech giants like Microsoft and Amazon are also vying for a piece of the data analytics pie. While Palantir has a strong foothold, they need to keep innovating to maintain their competitive edge. Another factor to consider is their financial performance. Palantir has been known to have fluctuating profits, and their path to consistent profitability is still being closely watched by analysts. Remember, investing in individual stocks always carries a certain level of risk. It's crucial to do your own research, understand the company's business model, and assess your own risk tolerance before making any investment decisions. So, is Palantir the right investment for you? Well, that depends. If you're comfortable with a bit of volatility and believe in the long-term potential of big data analytics, PLTR might be worth considering. Their unique position in government and enterprise sectors, coupled with their cutting-edge technology, makes them a compelling player in a rapidly growing market. However, their ethical considerations and financial performance need to be carefully evaluated. As always, diversification is key. Don't put all your eggs in one basket, even if that basket is filled with big data and AI algorithms. Balance your portfolio with a mix of investments that align with your risk tolerance and financial goals. Ultimately, the decision to invest in Palantir, or any other company for that matter, is a personal one. Do your due diligence, weigh the potential rewards against the risks, and make an informed decision that you're comfortable with. Let's talk about Meta Platforms, formerly Facebook. It's a giant in social media with billions of users. But Meta is more than just Facebook. They own Instagram, WhatsApp, and Oculus. They're investing in VR and the metaverse. This diversification is key, and that's exciting for investors. Let's dive into the metaverse for a second because that's where things get really interesting with Meta. This isn't just about strapping on a VR headset and playing games. The metaverse is envisioned as a fully immersive digital world where we can work, socialize, shop, and basically live our lives. It's a bold vision, and it's one that Mark Zuckerberg and Meta are betting big on. Now, is it going to be the next big thing? Honestly, it's too early to say for sure. But the technology and infrastructure they're building will have applications in other areas. Think about the advancements in VR and AR that are already happening because of Meta's investments. These technologies have the potential to revolutionize industries like gaming, education, healthcare, and more. So even if the metaverse takes longer to materialize or takes a different shape, Meta is still well-positioned to capitalize on the future of these technologies. Remember, investing is a long game, and Meta is playing for the long term. They're not afraid to take risks, to innovate, and to push the boundaries. And that's the kind of company I want to be invested in. Now let's talk numbers for a second. Meta's revenue and earnings have been consistently growing, and they have a strong track record of profitability. Plus, they have a massive cash hoard, giving them the financial firepower to continue investing in new technologies and acquisitions. Look, no investment is without risk. Meta faces challenges like regulatory scrutiny, competition, and concerns about data privacy. But they've weathered storms before, and they have a history of adapting and overcoming obstacles. For me, Meta represents a long-term growth opportunity. They're a dominant force in social media, they're leading the charge into the metaverse, and they have the resources and the track record to continue innovating for years to come. In a world that's becoming increasingly digital, Meta is well-positioned to benefit from the trends shaping the future. And that's why I believe adding them to your portfolio could be a smart move. Let's talk about Amazon, a company that needs no introduction. They've become synonymous with online shopping, but here's the thing. Amazon is much more than just an everything store. Sure, their e-commerce platform is massive, but they've also strategically expanded into other lucrative areas. We're talking about Amazon Web Services, AWS, their cloud computing division, which is a behemoth in its own right. Businesses around the world rely on AWS for their cloud infrastructure, generating billions in revenue for Amazon. Then you have their subscription services like Amazon Prime, which has become almost essential for many households. Prime not only offers fast and free shipping, but also access to streaming services, music, and other perks, creating a sticky ecosystem that keeps customers coming back for more. And let's not forget their ventures into physical retail with Whole Foods, their foray into healthcare, and their ambitions in artificial intelligence and logistics. Amazon is constantly innovating and expanding into new markets, solidifying their position as a true tech giant. Amazon's dominance in e-commerce is undeniable. They've revolutionized the way we shop, making it easier and more convenient than ever to buy just about anything with a few clicks. Their vast selection, competitive prices, and efficient delivery network have made them the go-to destination for online shoppers worldwide. But remember, Amazon is not just about selling you stuff, they're building an ecosystem. Think about it. They have your shopping data, your payment information, your browsing history. This valuable data allows them to personalize recommendations, target advertising, and further enhance their services. And with their logistics network becoming increasingly sophisticated, they're able to deliver products faster and more efficiently than ever before. They're even experimenting with drone delivery and other innovative solutions to further streamline the process. Amazon's relentless focus on customer experience, combined with their technological prowess, has given them a significant competitive advantage in the e-commerce space. They're constantly pushing the boundaries of what's possible, and that's what makes them such a formidable force. Amazon's track record speaks for itself. They've consistently grown their revenue and earnings over the years, and their stock price has reflected this impressive performance. But what's even more impressive is their ability to diversify and find new avenues for growth. They're not a one-trick pony, they're not just an e-commerce company or a cloud computing company or a logistics company. They're all of these things and more. And that's what makes them such a compelling long-term investment. They're constantly evolving, adapting to changing market dynamics, and exploring new opportunities. From artificial intelligence to healthcare to space exploration, Amazon seems to have their sights set on disrupting every industry imaginable. Now, like any investment, Amazon does come with risks. Competition is heating up in the e-commerce and cloud computing spaces, and they face scrutiny from regulators around the world. But their track record of innovation, their customer-centric approach, and their ability to execute on their vision give me confidence in their long-term prospects. So there you have it, 5 powerful companies that I believe are well-positioned for growth, even in uncertain economic times. Tesla, NVDA, PLTR, Meta, and Amazon. Each of them is a leader in their respective industries, with innovative products and services that are shaping the future. And by the way, I'm still adding to all of the above. I believe in these companies for the long haul. Remember, investing involves risk, and past performance is not indicative of future results. It's crucial to do your own research, understand the companies you're investing in, and make sure their long-term visions align with your own investment goals. And one final piece of advice, I strongly suggest you get a fiduciary financial advisor. It's pennies on the dollar compared to what they can help you save and earn over the long run. Happy investing!